Man, I need to get a whiteboard. We got people in the room, so I won't keep everybody waiting too long. Anybody to jump in, to jump in. Good morning, all. Hope you guys enjoying your Saturday morning. We're started this session today, and we're gonna call this "How to Grow a Small Account." Just seeing a lot of people battle with, excuse me, got a coffee burp. But yeah, see a lot of people, going through the trial of fire of trying to grow and sustain, get some consistent returns using a small account size. So I just want to dive in a few techniques that I use personally, and I've seen other traders use to kind of battle the beginning stages of coming into the trading space, um, taking a small account size, and actually allowing your trading to work for you, and actually to start seeing some consistent results and some growth in your account balances. So we'll start off today. Let me cut off some of this noise here. Got my classical, got the opera going in the background, man, trying to serenade. You know what? Let me. You have to bear with me. I just got a message. Somebody's jumping in too. Let me wake up a little bit. So I think today we'll start. We'll start first with everybody's favorite. We'll jump onto the on some technicals. I'll show you guys a few methods that I'm using to negate risk and also optimize and get the most out of my trade performance. So we're diving here into a little chart view. You guys give me a second here. I'm just trying to wake up. All right, here we go. All right, and now, as a beginner or no matter what level you're on, as a trader, we want to optimize our positions. We want to optimize our position sizes, and we also want to just make the most out of each trading opportunity that presents itself. So some of the things I want you guys to take a look at, and it doesn't matter which trading strategy, which way of implementation you're going to be using. But the first piece of advice, I got a couple of keynotes here written for you guys. As far as technicals, the first thing we want to do is I would err on caution. What I would recommend is only take trades after the break and retest. So I'll give you guys some examples of break and retest. And hopefully we can kind of demystify the markets for you guys today. So as newer traders or traders just trying to overcome the equity curve, we usually get mixed into all this new information. There's a lot of data flowing in front of us. There's a lot of different techniques and indications we can use to make an optimum trading decision. What I would say to you guys is, let's keep it simple. The simpler, the better. So starting out to see growth in your account, you want to find a method that works towards your personality, works towards your style, your liking, and we want to stick with that. So I was speaking about the break and the retest. And I know I got some more seasoned traders that, okay, this is a stock. Sorry, I was looking at Halliburton this morning. Let's get us a Forex pair. A lot of people come to me and they're like, oh man, the market's hard. Y'all make this look easy. Oh, it's easy for you. I'll show you guys how easy the market is and what you can do to Or let me take that back. I'll never say easy. Let me show you how simple the market maneuvers and operates. So we're always taught basics 101 as we want to participate in the trend. The market's doing two things, and there's two ways to enter the market. If you guys take advantage of this, I'm going to be preaching on this heavy. You'll start seeing some decent results. Or you see your win percentage go up. So we have the market going up, clear uptrend. We have the market going down. Most simplest method to start seeing consistent returns, technically wise, would be to play the break and a retest. So we got market in an uptrend, breaks a level that you identified, come back, retest your entry to continue to trend up. Same on a ladder side when it's coming down, wait for the price to break your level. And that's a horrible example there. So we'll have a retest and a drop. So I'm gonna say for most people that want to start, you got to have a base as you're trying to grow an account. We want to do everything in the same exact way. We want to build upon our routine. So I would urge that you guys would start using this break and retest method. Wait for the market to break a level that you're looking at, come back, retest it. As you see that the level is standing true, or you're seeing some type of support or resistance at that particular level, then you take the trade in the direction of the trend. So that's one method that we can use technically to actually gain an edge over the market. Is we're going to use simple break and retest. So I won't go too in depth because, like I said, we want to keep it simple starting off. Our mission is to add up wins, small gains, and allow the compounding effect to take place. So doing this is going to give us a high probability trade, give us an opportunity to recognize what we're doing, stay in the same exact method, same time. Next thing I would advise is to always start on your higher time frames. I see a lot of people that starts on like the hour. I understand the thinking behind it. You know, we don't want to be in trades all day. We don't want to babysit our trades. We don't want to, have to. We trade to make a living. We don't live to trade. So of course we want to get in and get out where we can. But I always want you guys to err on the side of caution and start on your higher time frames, work your way down. Even if you're trying to trade these lower time frames, you want to have the levels kind of spotted. The higher the time frame, the more important the actual level will be. So we can see, we can even do this here. We can replace some of this. Let's go about here. So I erased all the market before, and we will pretend like we didn't know what was coming up. So I jumped on my daily first. I marked off the most recent high, and we could mark off the most recent low, one of these two areas. So if I was to let the market play, we'll fast forward that. Let's go ahead and skip all the way through. I just want to show you guys how this market, how this actual area played relevance or came back relevant time and time again in the future. Now we use this higher time frame concept. We did get a poke out here. We did get, market does what it wants to do. But for the most common point, it's showing that this area has some type of importance. So it's going to play the same amount of importance as if you're on your lower time frames on a 15-minute. I know the 15-minute time frame won't give me enough momentum typically to push through this unless I'm seeing large candles. I'm starting to see increases in the spread. So those two things are what I want to dive on with technicals. Well, we'll have more intricate technical training coming soon. But as I name this is to grow a small account, the unpopular opinion. So we're gonna dive into the dichotomy of actually growing the account. Now that we got all the jazz, a little bit of jazz, a little bit of the flash of the markets charts. Wrote down a couple things, and this does kind of directly go back into technicals. You want to have a sound edge. Okay, so you may ask, what do I mean about by edge? An edge is an advantage over the marketplace that we can actually exploit time in, time out. And I'll actually give you guys another one of my setups or something that I'm using as an edge in the market. I won't go in much detail, but I'll give you guys an example. Around the market, let's give it a little bit more of a technical view. Okay, bam, there we go. I kind of like that one, but I don't. Okay, so we see here, we see the market was, well, let's find another. I want it to be clear. Oh, here's a good one. So down here I have a volume indicator. It's going to be the leading indicator, the only leading indicator showing the transactions between the banks and hedge funds. When I come into the market and I'm looking for different break patterns, I'm looking to see if the market's going to continue in a certain direction in these volume patterns, and they're giving me different indications. So I see here a spike. I see an actual wick on the candle showing me exhaustion with the increased momentum or liquidity of the banks coming in. It's giving me an indication that the market's going to continue selling in this direction. It's showing me that they tried to push the market up. They ran into exhaustion and they didn't like the price point that they tried to push to. Sellers came in heavy, and they're going to continue this based off of me seeing that there's a lot of sellers in this candle. So I'll take the trade on the wick, ride it on down. That there will be an example of having a sound edge. I back tested that edge off of, I would say, almost years of data. So I ran, through and just looking at past data and seeing how many times that actually worked. So now that I have a sound edge, I'm going to only be looking for that particular setup. I'm not going to get caught in all this mix and up and down and waiting for this, waiting for that. I'm going to look for my edge. I'm going to play my edge, win, lose, or draw. If I see that actual signal, I'm taking the trade. I worry about the aftermath in the latter fact, or when I'm getting ready and I'm doing my journaling and I'm looking at the trades I took throughout the week. I start, kind of seeing what I did wrong, what I could have did better, what happened with that edge. Is that edge still working in these current market conditions? So like I said, we're going to hit the unpopular. We're going to hit some things that you guys may have heard, may have not ever heard before in the industry. So we're using that same advantage each and every time to actually get a solid win rate, and we can determine the actual edge. Okay. This all does go into edge. Okay. So mindset is key. I know you guys may hear people run around, make sure your psychology is right, make sure this is right, but they don't dive into what they mean. So mindset, having an understanding of, let's be logical. We're not going to take a $300 account, a $200 account, say $1,000 accounts to, 5 figures, 6 figures in 1 week of trading in one trade. So we can throw all that out the window. All these screenshots we see, all this high risk, high leverage activity. Let's throw that out the window, and let's be sound investors and make the most of the opportunity we have afforded to us. So that's going to be a little bit on mindset. You have to put in the work. A lot of people, they look at trading. Yes, it is a form of passive income. Uh, there's leisure within trading, but don't get it twisted. It's work. There's no way around it. You have to put in the work. When I first started out trading, I kind of half-assed it. Excuse my language, anybody, but I kind of lollygagged around. I would watch a little bit of this. I would see somebody get results. I would jump in there and try to pay for their course, pay for their education. I would try to mimic what they were doing, and then I'd get mad at the person and be like, "Hey, this don't work." Not looking at it was self. I didn't know what they were doing behind the background. I didn't know what type of work, what type of dedication they put into it. So it's going to be another facade. Yes, trading does get simple. Trading does become, I mean, you start doing it like the back of your hand, like anything like repetition. Like when you first start riding a bike, it's probably one of the hardest things you'll ever do is learn how to keep your balance. But after a while, once you finally you got it down and you fell a few times, you scraped your knee, your elbows. What your parents tell you? Get back on the bike. Get back on. Keep trying to ride it. Eventually, you learned how to balance that bike without training wheels, without anything like that. And to this day, you're gonna always know how to ride a bike. You can jump on a bike without even thinking about it. It's muscle memory. So that's how trading is. You get out what you put in. Um, okay, now as far as P&L, let's say we're starting off with a small account balance. Let's say $100, $200. That's great because the market can bring forth your wildest dreams and it can bring forth your worst nightmares if you don't err with caution. So I'm gonna be real blunt and real honest on this session with everybody because I think it's needed, especially among the people that follow me and we're actually training together. I want to shape this so we can come into these next. We're seeing some great things. Don't get it wrong. Like I'm seeing people grow their accounts. I'm starting to see people taking trades by themselves. They're hitting the markets. They're damn near sending me signals, sending me alerts. So it's beautiful, but I want to keep this momentum going. Um, so that brings me to if you start with a $200 account. Let's say some way you took that account and you made 30%, 50% on a good week. The market's very volatile, so it's just doable with everything that's going on. So say we get a nice increase in our account size. Well, hey, I don't know about y'all, but my goal when I got in this was to not have to do anything else. So don't just stop there and think, okay, I put in this $200, I made $50, I made $100. This next week, I'm finna go in there and I'm gonna kill the market again. I'm gonna make another $300-400. It don't work like that. You want to start learning how to compound the account so you can give the account room to grow, and then you start seeing the magic of the multiplication of compounding. So what I did was, when I first hit the market, I had, of course, I had my ups and downs. I lost some money, won some money, but when I really got serious, I took like a $500 account, and even when I made money, I could make $150. I would still go in there and I would throw another $50 when I got paid in my account because I knew the importance of what I was doing and the opportunity that I had. So I invested in myself. I took, they say, well, hey, it's troubled times right now. I understand everything we're facing in the economy, the hassle, but I would tell you guys, a lot of us is going to come out of this better than we ever been because we're going to be regimented. We're going to have a routine and we're going to live and die by that. So we're going to see the changes in ourselves. We're blessed all to make it through this. We're going to come out and just be better individuals. So, go back to kind of your roots. I know I'm not a millionaire, so I know everybody can understand times of lack. And if you don't, good, bring some of your luck or your skills to us so we can use that as well. But think about the times when you didn't have. What were some of the things that you did? Me personally, when I was going to work, I stopped eating out every day. I started making cuts, and this again, why I say the unpopular opinion, because when you start telling people they got to put in work, they shot back, not understanding nothing is forever. Even trading is like seasons. You have you gotta plant, you gotta reap before you're able to harvest. So you have to put in what you get out. So I stopped eating out. Where I'm from, we call it the ramen noodle diet. I went on one of those, but see what happened is very quickly. I spent maybe a month and a half of doing it. Before I know it, my account with my trading, it was up to a couple grand. I say, whoa, okay, hold on now. I'm working with something now. Most people at that point will get laxed. You dive in deeper. I started seeing where I can scale back a little bit more. I give you guys a present day, a present day example. Like right now, I'm making, not to brag, but I'm doing decent alongside of my trading and different opportunities. But I still went, and I could go. I always wanted a loft. I've been eyeing one here lately in the city, but instead of going to go spend all this money, have this big old overhead, I cut back. I went and moved to a cheaper place. I sat back. I did things like this that we need to do. And I'm not saying anybody has to be as extreme as I took it, but you do have to realize that there are little things that you can do to improve your trading outside of your trading. So we're gonna go ahead and I don't have too much. We're gonna speed this up a little bit. So I just want to kind of give you guys a little dose or a little look into the mindset of what it takes to progress in your trading. So next topic is going to be risk management. I'll get off my soapbox, but the next topic will be risk management. Vital. There's three parts in trading. Of course, you got your technicals, you got your fundamentals or sentiment, you got your psychology, and I also add in you have risk management. Now, risk management isn't what most people think. There's so many different ways to manage your account, to manage your trades. Personally, I use a 3-to-1. So I'll use a 1-to-3. So anytime I'm risking $1, I want to look for $3 in return. The way that we do that is through stop loss and actual take profits, allowing our trades to mature, to run. You can use this ideology on any type of trading method, whether it's scalping, long-term trading. You just want to make sure that you actually have an opportunity, you afforded yourself an opportunity to get back more than what you're actually risking. You see a lot of people that do it backwards, like, yeah, they may make $2,000 on a trade, but they risk the whole account to try to get that. They risk $10,000 to get to. Small things like that, that when we jump into this, it's such fast pace that we don't even think about certain things like that. So risk management's big. How much are you risking to get back? I wish I would have pulled up my trade plan, or I will if I have enough time to pull up my trade plan. So risk management, 1-to-3, that ties into your edge. So if you know that you're winning after we did all our technicals, and okay, I did crunch the numbers. I took 10 trades. I won 6 trades out of the 10. I have a 10% advantage over the market. Now I want to take that 10% advantage and I want to size in. I want to scale in that I'm actually getting a nice return each time I get that method. So now that 10% times 2 is what, and I won't give you guys a math quiz today, but times 2 basically is what the return or the potential P&L that I'll see throughout that week. So now that I have a 2-to-1, I have a sound edge over the market. I have another edge over the market because I know that if I keep taking the trades, the odd or the numbers are going to play out in my favor. So I have both of those, and I go back throughout the week, and now I'm just letting the numbers do the work. I'm not stressed out that I lost this trade. I'm not stressed out that I don't know the perfect method to get into the market. What I'm doing is I'm letting numbers, men lie, women lie, the numbers won't lie. So I'm letting numbers discover my edge and discover how good of a trader I am. I'm discovering where are my weaknesses psychologically, technically. All those things come back into the numbers game. So risk management is key. Study up on that. We have a few methods to help you guys, get the most out of your risk, whether it's going to be calculators that you can put on your MT4 that'll show you spreads, the amount that you're using or risking in your account. Next thing we'll dive in real quick before the meeting concludes. And I may jump back on if anybody wants to jump on. We'll recontinue this. But we got about 2 more points here. We got twin trading. Twin trading is going to be vital. So I'll tell you guys, we like to segment out our trades instead of putting on a standard lot here. And the things I know it's kind of dragged out right now. I didn't have it structured, but the things I'm doing is you guys are going to have the potential to take. You want to make whatever the sky's the limit. You want to start making $1,000 a week, $5,000 a month. These are the things that you're going to do to be able to do that. So instead of putting a standard lot, it looks pretty. It looks sexy when we have a standard lot on there. We caught 15, 20 pips. We got, $150, $200 in one trade, but we have so much risk in the market. Just don't believe the popular opinion that the market is not random. There are key points, or there is a key structure or a key way that the market runs, but we are experiencing live randomness. I can't tell if Trump's going to go up there and say something outlandish, or if somebody's going to drop a bomb in another city. We have to remember, this isn't just a video game. These are economic factors that are driving these candles. So I can have a perfect setup. I can stop a standard lot on this. And let's just say the market shoots up just a little bit just to retest this. Well, now I'm 20 pips. I'm down 20 pips. So I'm now down 30 pips with a $200 account. So I got 30% of my equity on the line, and it's wearing on my mental. I'm ready to just close the trade. I don't want to blow the account. Let me tell you guys, you should do this. You should put a 0.20. You should segment it. Put a 0.25 here. Trade goes in my way. Good. Comes back, retest, because the market always moves in waves. Drop another 0.25. Bam. I'm halfway into my full lot size. Now I have room in my equity curve to either take, what if I see another trade that's a great possibility that's going to run longer? Now I can take that trade. Or I can wait for another pullback, get back in the market, pullback. Bam. Now I'm almost with the full size of my account, of my lot size, or what's allowed it to me. Bam, we get another drop. So at this point, you're using your decisions, you're using critical thinking skills to determine if you want to continue to hold the trade, continue to add in. But now you don't have as much risk. These other two trades are paying for the additional trades that you're taking, and you're allowing your trade room to work, because we don't know. We want to take what the market gives us. We don't know what it's going to give us. It may give us 10 pips. It may give us 300 pips. But we want to be in position to take advantage of whatever, the market is going to be gracious enough to give us. So twin trading, segmenting out your trades. Twin trading is going to be, you may place two trades here, two segmented trades here. Okay, you want to pay yourself for the day. Nick, I don't want to be in the market. I don't want to have to be in the market. I just don't like being in the market. Okay, so you put in one, bam, here 30 pips, take your profit. The other one, you move it to break even, and you let it run. You let it pay you. If it hits your stop loss, that's a risk-free trade. If it doesn't, you can come back whenever you just remember that you're in the market. I done did it for a couple of days and look up, and the market then ran 400 pips in my direction just because I had a twin trade. So now I'm giving myself the most opportunity to make the most out of each trade. So that allows me to have risk management up front, but it allows me to trade like I'm still trading a heavy lot size. So at the end of the week, I'm looking like, wow, these 0.2s really adding up. I'm not losing as much right now, and I'm actually giving my trades room to do what they want to do. If they want to spike up, I'm affording myself the luxury of actually trading. Got about a minute or two. I'll go ahead because I just got two more points. So I'll probably open the room right back up. But we want to look at the compounding effect. Compound is week to week, day to day. We're going to see increase in size in our accounts. So I'm big heavy on letting people withdraw. So if you have a good week, withdraw you out $20. Buy the family pizza. You guys have no idea what that does to your psychology to actually make this thing real. I done dealt with traders who've been trading for years, and they have the drive, but they never get a withdrawal. I don't care if it's $10. Buy yourself a sandwich. You'll be surprised how good that sandwich tastes when you didn't have to bust sweat equity for it. You didn't have to punch a clock. You just hit a keyboard. So you want to start doing little things like that that tricks your mindset into bringing in prosperity and wealth. And you also leave some money in the account. So next week, you're playing with house money. The market is giving you money to trade with. So the next week I have $50 on top of my 250. Okay, now I got some room. I can move my stop loss. I can make it tighter. I can do the same exact. The best thing is to do the same exact thing and try to get another $50. Now I have $100. Now I can up the lot size into a 0.3, a 0.4. The next week I'm getting, instead of the $50, I'm looking at 125. Plus I add in the 100 that I made the last week. Now I got 225. Then I keep doing the same routine. By the third or fourth week, you can size up the account $1,000, all methodically and all strategically. So what I'll do is I'm gonna go ahead and close the room. I'll open up another room. If anybody else wants to join, we'll give a few minutes for